The global economy is shifting beneath our feet, quietly and without warning, in ways that most people will only recognize when it is already too late to react. The first signs rarely appear in headlines or breaking news alerts. They begin in the blind spots, where governments soften the numbers, where markets pretend not to notice, where ordinary people continue living their routines, unaware that something fundamental is cracking underneath. Yet the signals are emerging now with an unmistakable clarity for anyone willing to look closely. Over the past several months, the world has entered a phase of subtle but accelerating a phase that unfolds silently at first, long before the shockwaves ever reach the average American household. This is the quiet beginning of a larger collapse that is forming piece by piece. You can feel it in places where data no longer matches reality, where optimism feels forced, and where leaders seem more interested in controlling the narrative than confronting the truth. Manufacturing across the globe has slipped to its lowest point since the aftermath of the 2008 financial crisis, an early sign that the engine of global production is losing power. In China, a property market once considered unshakable is unraveling at a speed that has stunned even long-time analysts, wiping out trillions in wealth and pushing millions of households into uncertainty. And in the United States, the bond market, which underpins everything from mortgages to business loans, has shown stress levels not seen since the peak of the last financial meltdown. These are not random events. These are the first fractures of a larger structural breakdown. But the most troubling part is how quietly it is all happening. There are no mass panics, no dramatic headlines declaring a global emergency, no run on banks or stock market free falls, at least not yet. Instead, the deterioration is slow, almost invisible, surfacing only in the margins where early warnings always live. It takes shape in rising debt loads that governments pretend are manageable, in shrinking corporate margins that executives downplay on earnings calls, in households stretched thinner than ever as the cost of everything climbs faster than wages. It is a collapse beginning in silence, the kind that catches people off guard precisely because life still feels normal on the surface, and that is the danger. Americans have lived through crises before, but those crises came with alarms, shocks, headlines, chaos. What we are entering now is different. It is the kind of erosion that hides behind routine, a slowdown that unfolds behind the noise of daily life. A shift so gradual that by the time the public finally notices, the foundations will already have weakened beyond repair. This is why the quiet phase matters. It is the moment when the collapse is easiest to miss and hardest to stop. It is the moment when the story begins not with panic, but with calm. And it is happening right now, beneath the surface of a world many still believe is stable. If the quiet deterioration of the global economy is the part most people never see coming, then the numbers hidden beneath the surface are the evidence no one can argue with. They reveal a world carrying a level of financial weight that cannot be sustained much longer, no matter how confident policymakers sound on camera. These numbers don't shout. They whisper steadily, consistently, refusing to be ignored by anyone who understands the language of crisis. And when you begin to follow those whispers, the picture that forms is far more troubling than the headlines suggest. Over $50 trillion in global debt is set to be refinanced at higher interest rates within the next 2 years. That means governments, corporations, and households everywhere will be forced to pay more for the same money they borrowed when times were easier and rates were near zero. It's a shift that quietly drains the world's financial system, and it is already happening. In the United States, the cracks are showing in places most Americans rarely think about. Nearly half of all small businesses, the backbone of the American economy, report that they can no longer pay rent on time. Not because they are irresponsible, but because costs have risen faster than revenues for 3 straight years. Commercial real estate vacancies are climbing in major cities, and the pressure is building on regional banks that hold thousands of these loans. None of this is making front-page news, but to anyone paying attention, the signals are becoming impossible to ignore. A financial system is only as strong as its smallest nodes, and right now, many of those nodes are quietly buckling. And while the United States faces its own pressures, the situation in China is far more severe. The country once called the engine of global growth is now facing the largest real estate collapse in modern history. Over $6 trillion in housing wealth has evaporated. Entire apartment towers sit unfinished or empty. Developers that were once celebrated giants can no longer survive without government intervention. Chinese consumers, long the driver of Asia's growth, are spending less, saving more, and losing confidence in their future. When the world's second-largest economy slows, the consequences ripple far beyond its borders. It affects American factories, American farmers, American investors, and ultimately, American jobs. Yet the full scale of China's downturn remains something global. Markets are still too hesitant to confront Europe. Meanwhile, is experiencing its own form of quiet breakdown. Industrial output across the continent has fallen to lows not seen since the energy crises of the 1970s. High energy prices, shrinking exports, and an aging workforce are placing long-term pressure on economies that once powered global stability. It is not a dramatic collapse, it is a slow, grinding erosion of resilience. And when multiple major economies weaken at the same time, the global system reaches a level of fragility that even small shocks can turn into major disruptions. These numbers matter not because they predict exactly when the next crisis will strike, but because they reveal how vulnerable the world has become. Vulnerable to tighter credit, vulnerable to geopolitical tension, vulnerable to one unexpected event spiraling out of control. Most collapses do not begin with panic. They begin with data that people choose to ignore. And right now, the data is no longer subtle. It is telling us, with quiet certainty, that the global economy is heading toward a moment of reckoning. What makes this moment especially dangerous is not just the weakness appearing across different parts of the global economy, but the way these weaknesses are beginning to connect. Economists call it systemic fragility, a condition where the system becomes so tightly interwoven and so dependent on endless stability that even a small disturbance can trigger consequences far beyond what anyone expects. It is the point where the world no longer needs a massive shock to fall into crisis, because the structure itself has lost its ability to absorb stress. And today, that fragility is everywhere. You can see it in the rising tension between the United States and China, where every policy move, every trade restriction, every military gesture in the Pacific adds another layer of uncertainty to an already strained relationship. What began as a competition for influence has evolved into a sustained economic Cold War, with global supply chains, technology access, and strategic resources all hanging in the balance at the same time. Energy markets are entering a period of tightening that few are prepared for. Multiple major producers are cutting output, shifting alliances, and weaponizing supply in ways that threaten to push oil prices into new territory. Energy is the bloodstream of the world economy. When it becomes unstable, everything connected to its transportation, manufacturing, agriculture, consumer prices begins to distort. Americans feel it first at the gas pump, but the ripple effects move much deeper. Higher energy costs strain businesses, reduce hiring, and raise the price of nearly everything people depend on. In a fragile global system, pressure in the energy sector can spread faster than most expect, amplifying stress across multiple regions at once. And beneath all of this, the world is confronting a historic level of government debt, the kind that cannot be solved by simple policy adjustments or temporary stimulus packages. For years, governments relied on low interest rates to borrow freely, promising the public that growth would outpace debt and that everything would eventually balance out. But interest rates are no longer near zero. They are at multi-decade highs. Every dollar borrowed now costs more. Every payment due cuts deeper into national budgets. Nations that once had the financial capacity to respond to crises with strength now face the possibility of being overwhelmed by the very tools they used to survive previous downturns. This convergence, geopolitical tension, energy instability, an unprecedented debt creates a world where small disruptions can become full-blown economic shocks. A regional conflict, a major corporate default, a sudden shift in currency flows, or even a simple policy miscalculation could be enough to set off a chain reaction. And once that reaction begins, slowing it becomes nearly impossible. The global economy is not built to handle synchronized stress across multiple regions and sectors. Yet that is exactly where we are heading. The unsettling truth is that collapses rarely start with chaos. They start with fragility. They start with systems stretched too thin, leadership stretched too confident, and societies stretched too unaware. The world today is walking that line. Nothing dramatic has occurred yet, but the pressure is building, and the margin for error is shrinking. In a system this fragile, the next phase won't arrive with warning, it will arrive with impact. And when it does, the illusion of stability that so many still trust will dissolve almost instantly. Every collapse in history follows a rhythm that feels eerily familiar to the moment we are living through right now. It begins with small warning signs that most people brush aside. It grows through quiet fractures that barely make the news. And it accelerates only when the pressure has built for so long and so silently that a single spark is enough to ignite something far bigger than itself. Today, the world stands at the edge of that spark, not because one event is about to tear everything apart, but because the system is now so stretched, so fragile, and so dependent on perfect conditions that almost any disruption can send shockwaves through every corner of the global economy. And yet, despite all of this, the surface still looks calm. Stores are open. Markets fluctuate but don't collapse. Governments reassure the public that recovery is coming. People continue building their lives, unaware that the financial ground beneath them is slowly, steadily shifting. That calm is deceptive. It always is. The truth is that collapses don't wait for people to be ready. They don't announce themselves with fanfare. They arrive the way night falls, slowly at first, then all at once. A bank failure here, a sovereign default there, a sudden spike in oil prices, a major company revealing losses it can no longer hide, a geopolitical event that spirals out of control. Each one seems manageable in isolation, but together they form a chain reaction that can redefine the economic future of entire nations. Once that chain reaction begins, the world does not return to what it was before. It adjusts. It absorbs the damage. It rebuilds, but never from the same foundation. The old order gives way to something new, shaped not by stability, but by upheaval. And that is why understanding the early stages matters so much. Because the people who see the shifts before they hit are the ones who avoid the worst outcomes. They are the ones who prepare, who adapt, who understand that moments like this, moments of global transition, are rare, dangerous, and transformative. They are also moments when those paying attention can position themselves ahead of the changes that everyone else will only recognize in hindsight. Americans have always endured upheaval with resilience, but resilience begins with awareness, with clarity, with a willingness to see the world as it is, rather than as we hope it will remain. In the months ahead, the signals will grow louder. The stress will become harder to hide. The cracks in the system will widen. And the early phase of this collapse, the quiet phase we are living through right now, will give way to something far more visible. This transition will test economies, governments, and societies in ways few alive today have experienced. But it will also reveal who is prepared and who is not. The future will not belong to those who wait for certainty. It will belong to those who see the patterns forming now, who connect the dots before the dots become headlines, and who understand that global change does not happen in a single moment, but in a series of subtle shifts that build toward an unavoidable turning point. That turning point is approaching. Slowly at first, then all at once. And the world as we know it will feel different when it arrives. On Global Collapse Report, we will be here to break it down, piece by piece, with clarity, honesty, and the kind of perspective that cuts through the noise. Because in times like these, information isn't just power, it's protection.